Now we're going to shift gears here quite a bit because Japanese stocks plunged more than 5% on Tuesday, and the yield on the benchmark government bond dropped into negative territory for the first time ever. It's the most dramatic consequence of the Bank of Japan's decision last month to introduce negative interest rates. Kwon Jang-ho has the details.
Global investors might have been hoping for a quiet week, with China and many markets in Asia closed for the Lunar New Year. But after markets in Europe and U.S. took a tumble on Monday, Japanese stocks followed suit, taking a turn for the worse on Tuesday. The Nikkei index dropped 5.4% for the biggest single-day drop since May 2013. The TOPIX index also fell by 5.5%. Tokyo's banks were the biggest losers, with Mitsubishi UFG and Sumitomo Mitsui both down more than 8% at market close. The yen also hit a 15-month high against the US dollar during today's session. This affected export businesses, including Japan's auto industries, with Toyota, Honda, Nissan all dropping around 6% or more. There was also a historic turn, with Japan's 10-year government bond yields turning negative for the first time. These movements came in spite of the Bank of Japan introducing negative interest rates less than 2 weeks ago to try and reinvigorate the economy. Global markets are now waiting for Federal Reserve Chair Janet Yellen to give word on Wednesday about future US rate hikes. Elsewhere in Asia, Australia's S&P index plunged nearly 3%, while markets in the Philippines, Indonesia, Thailand and New Zealand were also down. China's markets are closed all week for the Lunar New Year holiday. Hong Kong and South Korea will reopen on Thursday. Kwon Jang-ho, Arirang News.